Welcome back, everyone. I am your host, Rachel Weaver. I have with me today a very special guest, Noura Almasri. Noura is an enrolled agent with the IRS, the founder and CEO of Nourasbooks, and an international best-selling author. With a master's degree in business information technology from DePaul University, she brings over 20 years of accounting experience to her work in managing and growing nonprofit organizations. Noura is known for her expertise in increasing nonprofit funding through streamlined processes and regulatory compliance. In addition to her nonprofit work, she's dedicated to helping business owners achieve their financial goals by boosting cash flow. She founded Nourasbooks, a virtual tax and accounting firm with the mission of helping individuals achieve their dreams while making a positive impact. Noura, it is always a pleasure to have you on BizTalk.
Thank you, Rachel. Very nice to be with you. It's always my pleasure.
So I would love to ask you a few questions today about business entities and structures. I, in particular, want to learn a little bit more about S Corp and what are the pros and cons of having an S Corp versus an LLC. So there's lots of talks out there, and some tax advisors and accountants will say, no, LLC is totally fine. You don't need an S Corp. And then I'll have another tax advisor or accountant tell me, Rachel, do you know how much money you're throwing away by having an LLC? You need to switch to an S Corp. And so for a lot of small business owners, they're like, what do I do? So since you are such a trusted advisor in my books, I would love for you to share with me and our audience some of the differences and the pros and cons of an S Corp. I want to dive deep into S Corp in particular.
Of course. So this is a great question because, like you said, there's a lot of different opinion on it, and a lot of people in TikTok who don't know really accounting, but they just got this someone told them they have to be an S Corp and they started talking about it. My favorite answer for actually having any question in taxes is really, it depends. So it's not one size fits all. It depends. So LLC is a great way to start. You don't want to elect to be an S Corp until you're ready. And how do you know you are ready? You need to talk to your tax advisor. You need to do some sorts of tax planning, because if it's better for you, it doesn't mean it's better for someone else. Or if someone saved a lot of money, it doesn't mean you'll be able to save a lot of money with it. So it really depends. And a lot of things that people don't know, S Corp is not an entity structure. Well, it is, but it's not. You don't go ahead and register S Corporation. On the state level, you have LLC, you have C Corporation, you have nonprofit corporation. These are the three main, maybe there are a few different stuff, but there's no S Corporation. And on the other hand, if you go to the IRS, there is no LLC. There is S Corporation, there is corporation, there is nonprofit corporation. This is basically the main thing that most people deal with. So once the first step you want to do, if you want to be an S Corp, you have to register. You can be registered as an LLC on a state level or a C Corporation. And then at certain points, you may elect to be taxed as an S Corporation. So it's typically a tax election. But when you do this election, when you are ready for it, when it's really going to save you money, because some tax strategy on the LLC level, you cannot take when you are an S Corp, and vice versa. So you need to see what's your entire situation, your personal, your marital status. Do you have kids or no? Can you take advantage of the tax strategies for LLC, or no, now you have to do an S Corp. And also income level on the entity level and on the personal level. Does it make sense for you to be an S Corp, or you cannot afford it yet? Because you have to put yourself on a payroll. One of the biggest actually differences is when you are an LLC, you cannot put yourself on LLC on a payroll. You actually can withdraw money randomly because there is no difference between you and the entity. Well, there is a shield like to protect you on a state level, but you cannot put yourself on a payroll as the owner. However, if you elect to be taxed as an S Corp, now you must put yourself on a payroll and you have to pay yourself reasonable salary in order to be able to give yourself any distribution from your company. So this is a big major difference because IRS wants their taxes, because now you're saving from your payroll tax, not payroll taxes, you're saving from your self-employment taxes, what you have to pay when you do LLC, but they're not going to let you go without paying any taxes. You have to pay payroll taxes. So you have to be on the payroll.
I see. So really, it only makes sense if you're ready, if you're at another, maybe even bringing in more money into your business to where you can pay that income tax, it becomes a benefit. And then would you say it's also beneficial if you have other people to put on that payroll and it makes more sense? Although you're going to pay more tax, I think you also receive extra benefits. Am I right or wrong?
Yes, you do receive extra benefits, but also that make more money, make enough money. It means different thing for different people. So maybe like if I talk to you, Rachel, maybe for you, more money is 40K a year. For someone else, it might be 100K a year. And now what I want people to understand that you cannot put yourself on a payroll when you do an LLC. However, you can put other people on a payroll. So it's not related. So, but you as an owner, you have different treatments.
Okay.
So that's why it just you cannot be on a payroll, but someone else can be on a payroll. Now, when an S Corp, you're running the payroll, like you're just adding employees at the same time. So it doesn't, like having more employees doesn't play a role on you have more advantage of being an S Corp or LLC. It really varies from business to business, from person to business, from person to person, from type of business as well. So that's why, like when we do the tax planning, I don't advise anyone to do that without tax planning, because we run scenarios. We show you, okay, this is how it's going to look like if you stay an LLC, and this is how it's going to look like if you elect to be an S Corp. So there's big difference.
Very good. Makes complete sense to me. So, what would you say are some of the key points to being a benefit to switching from an LLC to an S Corp? Because a lot of people start, like you said, as an LLC, right? And so when would you say it's really beneficial to switch over and make that move into S Corp?
So when you see that you're paying a lot of taxes, but still maybe you're missing strategies. So don't just jump into electing an S Corp. Maybe you're not taking advantage of the strategies that's available to you. So you want to wait for that. When actually you see yourself not separating well enough between your personal and LLC, you want to talk to your tax advisor to see, because it helps people to separate more when they file a different tax return, because when you're an LLC, you're actually filing with your personal if you don't have any partner. So you don't see the separation. But when you elect to be an S Corp, now you have to file by March 15, the corporation taxes. So that gives you actually the separation. But really, like, you really have to talk to your tax advisor, because you save in taxes, but you want to see, like, do you really save in taxes right now? And you do this separation in both like state level, IRS level, and so you don't commingle. It helps you not to commingle so much between your business and your personal, because now you file different taxes, you have to have bookkeeping, you have to have everything in place, and also you put yourself on a payroll, so you don't have to like, should I take this money now? Even though we still do it with the with the LLC, like help you structure when you pay yourself, but we get busy. So now when you have yourself on a payroll, okay, you're getting paid now. Okay, also like you want to keep in mind, you still can take distribution if you pay yourself a reasonable salary. So you're not stuck on that payment, but at least like you have something coming, you can schedule more payments like in your personal, because when you're an LLC, you don't feel like, okay, now I'm getting paid on this date. You really don't know. So it's hard to schedule yourself on a payroll. It gives you more motivation to be okay, like I have to make payroll, even if it's only for you.
Yeah.
Just okay. So you have to bring those money, so you do an extra work maybe. Like I just give you an example. I joined recently BNI chapter here, and now it's forced me to actually go and look for other business owners and talk to them. That will be benefit from both of us, but this is a requirement by them to actually invite other business owners. So it's forced me to go network. Same thing like here, you have to make a payroll, even if it's just for you. It's just like, okay, I have to make a payroll, maybe I need to do this sale. So like it helps you being more creative as a business owner.
Love that. Yes, makes complete sense. It's almost as if there's definitely some benefits, especially for those people who haven't made it to that point where they're not on a structured time frame, but then at the same with paying themselves. And so it's a struggle for them because they're automatically paid as an S corp. But then on the LLC side, there's a little bit more flexibility where if something happens in your personal life, you can make an owner withdraw even during an emergency situation. However, the next month, maybe you don't have to pay yourself to make up for that emergency that happened the month before.
You can still do that with a S corp, because for example, if your reasonable salary, for example, $1,000 a month, just an example, that's a reasonable salary based on the company size and based on everything like market and everything. If you hire someone, you're going to pay them $1,000. That's an example. Then you don't have to be stuck to that, because you still can give yourself a distribution. So if there is an emergency, you need to take a distribution, you can do that as long as you are on a payroll on a reasonable salary. So you can do that, but you don't have to take that distribution every single month. So there is this step, flexibility still with the S corp.
Okay, very good. So let me ask you, how does pass-through taxation work for S corporations, and how does it impact the taxation of business profits and distributions to shareholders?
Sure. So you file, like I said, on by March 15. So don't wait to March until March 15. You file the March 15. And if you want to elect to be actually an S corp this year, you have to make this election by March 15. Now you do this filing, and then you issue yourself K1 that has to be filed with the S corporation tax return. And that K1, you take it and actually put it with your personal return. That's how you actually transfer that. And what on the entity level, you're not paying any taxes, because like you said, it's passed through entity. So it's just like with the K1, and then you issue yourself a W-2 as well, because you're an employee. So you have two things coming from your S corp. K1 as a shareholder and a W-2 as an employee, and you file your taxes based on those.
Very good. Thank you so much, Nora. Tell the audience where they can find you.
Sure. So they can go to my website, www.nourasbooks.com/contact. They can actually book a call. We get on Zoom. They can actually be speaking to me or someone of my team, and we help them actually get started with whatever service they need. And I do a lot of YouTube video just for education. I did recently like few videos about S corp. For more information, they can go and listen to my other videos as well.
Very good. Well, thank you so much for tuning in today. Thank you for joining us. And we will be right back after this commercial break.